Usually when we talk about a surgical procedure, there's this expectation of pure human physicality, right?
Right, yeah, like you picture the bright lights and the sterile room.
Exactly. And a surgeon's hands physically doing the work. I mean, for a century, the quality of his surgery depended almost entirely on the steadiness of human hands and, the sharpness of a steel scalpel.
Yeah, it was a purely mechanical endeavor, highly skilled, obviously, but fundamentally limited by human biology.
Right.
And reliant on direct line of sight. I mean, if a surgeon couldn't see it or, physically reach it with rigid tools, they just had to cut the patient wide open.
But then you step into the world of modern robotic-assisted surgery, and suddenly that operating room looks like a lot more like a server farm or a high-tech fight simulator.
Yeah, it really does.
We're looking at a landscape that is no longer just about physical tools. It's about data, artificial intelligence, and raw computing power, acting as a co-pilot in the operating room. So, welcome to Talk Tickers. Today we are doing a deep dive into Intuitive Surgical's Q2 2026 earnings. We're going to break down the original source material and the earnings transcript for you.
Yeah, and the mission here is to really cut through that Wall Street jargon. We want to deliver data-forward, actionable insights in under 5 minutes.
Right. So for you, the retail investor holding or eyeing their stock, ticker ISRG, we're bringing you a rapid-fire breakdown. We want to see if these fresh numbers signal a buy, a hold, or a fold.
And, the broader context here is what makes this specific quarter a masterclass in corporate strategy.
Oh, for sure.
We have a company navigating severe macroeconomic crosscurrents, like shifts in pharmaceutical weight loss drugs and changes to healthcare subsidies.
Right, some real headwinds.
Exactly, while simultaneously rolling out the largest technological hardware upgrade in their history.
Okay, so let's lay out the playing field with the headline numbers. In Q2 2026, Intuitive Surgical hit $2.89 billion in revenue. Yeah, that is a 19% year-over-year increase. We aren't talking about a scrappy startup finding its footing here.
No, definitely not.
For a medical device company of this immense size to accelerate revenue by 19% in a single quarter, that requires massive institutional buying from hospitals globally.
And it flows straight to the bottom line, too.
Exactly. Non-GAAP earnings per share surged 28% to $2.80. Meanwhile, the metric that really drives their whole economic engine, total surgical procedures, grew by 16%.
Those figures immediately highlight a really powerful dynamic, which is operating leverage.
Right.
When earnings grow at 28% while revenue grows at 19%, the incremental cost of delivering that next dollar of revenue is shrinking.
Makes total sense.
Yeah, they are scaling efficiently. They don't have to build a new factory or, hire double the sales force to get that extra revenue. It falls directly to the bottom line.
Okay, let's unpack this because this is where I need to push back a little on the financial profile we're seeing. Yeah. The company reported a non-GAAP operating margin of 42%. Just to translate for you listening, we look at non-GAAP here because it strips out things like one-time tax benefits or stock-based compensation.
Right. It gives us a clearer view of the actual cash-generating power of the core business.
Exactly. But a 42% operating margin. I look at Intuitive and I see a company manufacturing massive 2,000-pound robots.
Right. Heavy machinery.
Made of aerospace-grade titanium, custom circuit boards, advanced fiber optics. They have global supply chains, heavy shipping costs, physical factories.
That's serious hardware.
But 42% is the margin of a purely digital SaaS company. Apple's operating margin sits around 30%.
Yeah, it's wild to think about.
How does a company bending heavy metal out-earn the most profitable consumer tech companies in the world on a margin basis?
Well, you really have to look past the physical chassis of the robot. Intuitive Surgical hasn't been a pure hardware company for a decade. Yeah. Yes, the Da Vinci robotic system is a multi-million-dollar capital expense for a hospital, and it looks super impressive sitting in an operating room.
Oh, absolutely.
But the robot itself is just the razor. The actual business model is the blades.
And what do those blades look like on a 2-ton surgical robot?
They look like highly specialized, single-use or limited-use instruments. Out of that $2.89 billion in total Q2 revenue, $2.47 billion was recurring revenue.
Wait, really? That much?
Yeah, that is 85% of their total cash flow. It doesn't come from selling the big machines. It comes from what happens after the machine is installed.
Okay, so every time a surgeon operates, They use specialized wristed tools like forceps, titanium staplers, ultrasonic energy devices that cut and seal blood vessels simultaneously.
Exactly. And here's the kicker. These instruments have microchips inside them.
Wait, microchips inside the disposable forceps?
Yes. The chip communicates with the main console. After a specific number of uses, say 10 surgeries, the microchip literally tells the system the instrument has reached its safe operational lifespan.
And what happens then?
It just refuses to fire. The hospital has to throw it away and buy a new one from Intuitive.
Oh, wow.
Add to that the annual service contracts to maintain the machines, the sterile drapes, the software subscriptions.
Yeah, it adds up fast.
When you have an ecosystem where 85% of your revenue is a mandatory consumable tax on every single surgery performed, your margins are going to rival a Silicon Valley cloud provider.
So the robot is essentially just a highly sophisticated vending machine placed inside the hospital, and Intuitive is selling the snacks at a premium.
That's a great way to put it.
And the scale of this footprint is frankly staggering. CEO Dave Rosa noted they exited the quarter with almost 13,000 systems installed worldwide.
I mean, think about the switching costs associated with 13,000 installed systems. If hospital wants to transition away from a standard software vendor, it's a headache for the IT department.
Sure.
But if a hospital wants to switch away from Intuitive Surgical, they have to rip out $1.5 million piece of hardware. They have to retrain their entire surgical staff, completely rewrite their operating room protocols, and deal with surgeons who have spent a decade mastering the Da Vinci interface.
And surgeons are incredibly protective of their tools. Over 15,000 surgeons are trained specifically on this ecosystem.
Exactly. The barrier to entry for competitors isn't just making a good robot. It's convincing an entire hospital system to abandon a platform they've already built their entire surgical workflow around.
So those top-line numbers and that recurring revenue model explain the financial health. But to figure out if this stock is a buy right now, we have to look at the specific product mix moving beneath the surface.
Right.
Why are hospitals, which are notoriously tight on capital right now, writing these massive checks in Q2?
Well, the overarching narrative of this earnings call is undeniably the Da Vinci 5 upgrade cycle.
To DV5?
Yeah, it's their newest, most advanced multi-port robotic system. In the quarter, they placed a total of 468 Da Vinci systems globally. Out of those, a massive 246 were the new DV5s. What's fascinating here is the sheer velocity of this hardware adoption. The DV5 was only recently launched.
Yeah, usually hospitals stagger their capital expenditures, right? They wait to see the real-world performance.
Exactly. Yet the DV5 is already completely dominating their placement mix. Looking at the U.S. market, they placed 267 systems total, up 24% from the prior year.
Oh.
But the critical data point is that about half of those U.S. placements were trade-ins.
So that means hospitals are taking their perfectly functional older models like the Generation 4 Da Vinci XIR and handing them back to Intuitive just to get the DV5.
Yes.
It feels a bit like trading in last year's iPhone just to get a slightly better camera. But in a hospital setting, capital expenditure committees don't authorize million-dollar upgrades for marginal improvements.
No, they definitely don't.
So what is actually under the hood of the DV5 that is forcing hospitals to upgrade so aggressively?
It comes down to a fundamental leap in architecture. The DV5 boasts 10,000 times the computing power of the previous generation.
See, I saw that metric in the transcript, and honestly, it sounds like a marketing team's dream buzzword.
It really does.
What does a surgical robot actually do with 10,000 times more computing power? It's not rendering high-end video games.
No, it's computing a localized, real-time, fly-by-wire haptic loop.
A what?
Historically, the single biggest criticism of robotic surgery from veteran doctors was the loss of physical sensation.
Oh, yeah.
In traditional open surgery, a doctor's fingers are inside the patient. They can feel the tension of an artery. They can feel the density of a tumor versus healthy tissue.
Yeah, they have that tactile feedback.
Exactly. When they moved to earlier robotic systems, they gained superhuman vision and steadiness, but they became totally numb.
Oh, I see.
They had to rely entirely on visual cues, like watching how the tissue stretched or blanched to guess how much pressure they were applying.
So they were basically operating via a very high stakes...
A very precise claw machine, yeah, visually reliant. The computing power of the DV5 solves this by introducing force feedback technology. The instruments inside the patient have microscopic strain gauges that measure the exact mechanical resistance of the tissue at the tip of the pincers.
Oh, wow.
Yeah, and that data is sent back to the console at blistering speeds, where microactuators recreate that exact physical resistance against the surgeon's fingers on the controls.
So the surgeon can now literally feel the tissue they are manipulating, even though they are sitting 10 feet away.
Exactly. Processing that sensory feedback loop without any lag, while simultaneously managing 3D visual data and system telemetry, is why you need a 10,000-fold increase in processing power.
And the clinical data proving the value of this haptic feedback is already materializing.
It really is.
Management highlighted a study presented at the American Urological Association annual meeting by Dr. Jacob O'Hara and Dr. Michael Stifelman. They look specifically at patients undergoing partial and radical nephrectomies, which are complex kidney removal surgeries.
Yeah, kidney surgery is notoriously delicate. The kidneys are highly vascular, meaning they are surrounded by major blood vessels, and they sit retroperitoneally, nested against the colon and delicate fascia.
Okay.
During the mobilization phase of a nephrectomy, the surgeon has to carefully dissect and separate the kidney from the surrounding organs and tissues without tearing anything or causing thermal damage from the cutting tools.
So the data showed that when surgeons used the DV5's force feedback instruments, it dramatically reduced trauma to the surrounding tissues, specifically protecting the colon and the duodenum during that mobilization phase.
Yeah.
Because the surgeon could feel exactly how hard they were pulling. They didn't accidentally bruise or traumatize the bowel.
Right.
The outcome metric they used was the return of normal bowel function. In the cohort of patients operated on with the new force feedback tools, 63% achieved a return of normal bowel function within just 1 day.
That is huge.
In the cohort without force feedback, it was only 28%.
That is a staggering improvement in patient recovery. Let's trace the economics of that clinical outcome. When tissue is traumatized during surgery, the body often responds with a condition called an ileus, where the intestines essentially paralyze themselves and stop moving to protect the area.
Yikes.
Yeah, the patient cannot eat, cannot pass waste, and cannot be discharged from the hospital.
So going from 28% to 63% of patients recovering bowel function in 24 hours means those patients are discharged days earlier.
Exactly. It frees up a highly expensive hospital bed.
Right, and it reduces the nursing hours required per patient, lowers the risk of secondary hospital-acquired infections. The hospital instantly saves thousands of dollars per procedure.
That explains the trade-ins. A hospital administrator looks at that data and realizes they cannot afford not to have the DV5.
For sure.
If the hospital down the street has it, and their patients go home in 1 day while yours stay for 3, you lose your competitive edge in the local healthcare market.
So the clinical benefit directly drives the economic benefit for the hospital, which in turn drives the capital purchase from Intuitive. It is a perfectly closed loop of incentives.
It really is.
Here's where it gets really interesting, though. Because as much as this earnings call felt like a massive victory lap for the DV5, the macroeconomic environment is actively pushing back.
Yeah, it's not all sunshine.
There are real, tangible headwinds in this report that the bearish analysts on Wall Street are circling. Let's look at the first major headwind, GLP-1s.
Right.
These are the blockbuster weight loss drugs like Ozempic, Wegovy, Zepbound. Management explicitly called out that U.S. Da Vinci bariatric cases continue to feel the impact of rising GLP-1 usage.
Yeah, with procedures declining in the high single digits during the quarter.
Exactly.
This is a classic example of pharmaceutical innovation cannibalizing surgical intervention. For decades, if a patient suffered from severe obesity and metabolic syndrome, the most effective treatment was bariatric surgery, like a gastric bypass or a sleeve gastrectomy.
Right.
These are invasive surgeries that physically alter the anatomy of the stomach and intestines to restrict food intake and change gut hormones. They are highly effective, but they carry surgical risks.
But now, a patient can take a weekly GLP-1 injection. These drugs mimic incretin hormones, drastically slow down gastric emptying, and signal satiety directly to the brain.
Yeah.
People are losing 15 to 20% of their body weight just with a needle. It makes complete logical sense that a patient and their endocrinologist would opt for the pharmaceutical route before authorizing a permanent alteration of their digestive tract.
Absolutely. Intuitive is literally losing surgical volume to a prescription pad.
Yeah.
A high single-digit decline in a major procedure category is a material threat. If you are an investor building a model for Intuitive's future cash flows, you have to seriously consider whether the bariatric surgical market will ever return to its historical growth rates.
Or if this is a permanent structural decline in demand.
Exactly.
And the GLP-1 impact wasn't the only shadow on the quarter. CFO Jamie Samuth also pointed to a moderation in U.S. procedure growth, specifically highlighting, quote, benign procedures that can be deferred. And the culprit they identified was changes in patient coverage and the expiration of enhanced premium subsidies for the Affordable Care Act, or ACA. Now, we are just impartially reporting what was stated in the earnings call here to understand the business impact.
Right, purely looking at the economics of it from the source.
Yeah. When those ACA-enhanced subsidies expire, the immediate downstream effect is that a large swath of patients suddenly face higher monthly premiums or are pushed into plans with significantly higher out-of-pocket deductibles.
Yeah.
The earnings data shows clearly that when this happens, patients alter their behavior and defer non-emergency surgeries.
Human behavior is highly sensitive to upfront costs. If a patient requires a complex cancer resection, they will find a way to pay for it regardless of their deductible.
Of course.
But consider a benign condition like a symptomatic hernia or chronic gallstones. It is painful, it degrades their quality of life, but it is not immediately fatal today.
Right.
If that patient finds out they now owe a $5,000 deductible out of pocket because their coverage changed, they will attempt to manage the pain with medication and delay the surgery until their financial situation stabilizes.
That explains the slight dip in expected U.S. procedure growth. The bears point to this and say the consumer's tapped out, healthcare costs are too high, and Intuitive's growth is going to hit a wall.
They do.
But CEO Dave Rosa offered a distinctly different perspective on this. He stated that the underlying disease burden is unchanged, and deferred conditions typically progress and will ultimately require treatment.
He is highlighting the physiological reality of deferred care. A hernia is a mechanical defect, a physical hole in the abdominal muscle wall where tissue or intestines are protruding.
Okay.
A change in an insurance premium does not heal a mechanical defect. A diet does not fix a hernia.
Right.
The patient can delay it for 6 months, but eventually the pain becomes unbearable or the hernia incarcerates, meaning the blood supply gets cut off. At that point, it becomes a surgical emergency.
So the revenue isn't destroyed. It is merely pushed into a future quarter. And when that patient finally shows up to the emergency room, the anatomical situation is often far more inflamed, scarred, and complex than it was 6 months prior.
Exactly.
Ironically, that heightened complexity makes the precision, 3D visualization, and wrist and articulation of a Da Vinci robot even more necessary to untangle the mess safely.
Exactly. So while you have to account for the GLP-1 and ACA headwinds in the short term, you have to balance them against the massive growth Intuitive is generating by diversifying entirely away from the abdominal cavity.
Oh, right.
If they were purely a bariatric and hernia company, this earnings call would have been a bloodbath.
Yeah.
But they're systematically attacking new organ systems. Look at the Da Vinci SP, their single-port platform. Procedures on the SP grew a staggering 61% this quarter.
Wow. For you listening, single port means instead of the traditional approach where a surgeon makes 4 or 5 separate incisions across the patient's abdomen to insert different robotic arms, they just make one single incision.
Yeah.
How does the engineering of that even work? If all the instruments and the camera are shoved through one tiny hole, say the belly button, how do they not just crash into each other inside the body?
It's an incredibly difficult engineering problem known as the triangulation challenge.
Okay.
In standard laparoscopy or early robotics, the tools enter from different angles, forming a triangle at the target tissue, giving the surgeon leverage to pull and cut.
Right.
If everything enters through a single tube, you lose that leverage.
Yeah, that makes sense.
Intuitive solved this by engineering snake-like, fully articulating instruments that emerge from the single port and then spread outward, essentially recreating the triangle deep inside the body cavity.
That is wild. And it's driving massive adoption. Growing at 61% means this isn't an experimental platform anymore.
Definitely not.
It's rapidly gaining mainstream acceptance, particularly in Korea and the US, for urology, colorectal, and narrow-space thoracic procedures.
Yeah.
But the diversification doesn't stop there. They also have the Ion platform, which grew 36% year over year. They performed 48,000 Ion procedures this quarter, crossing 400,000 cumulatively.
Yeah.
Ion isn't for cutting out organs or stitching tissue. It is a robotic-assisted endoluminal platform used primarily for lung biopsies.
The clinical challenge with lung cancer is that it is historically very difficult to diagnose early.
Right.
The lungs are not hollow balloons. They are a fractal network of complex branching airways that get narrower and narrower.
Okay.
If a patient gets a CT scan and it shows a tiny suspicious nodule deep in the periphery of the lung, the physician has to get a physical tissue sample to test for malignancy.
And traditional manual bronchoscopes are often too thick to reach the deep branches, right?
Yeah, or they aren't stable enough to precisely puncture a 10-millimeter nodule while the patient is actively breathing and the lung is expanding and contracting.
That makes sense. This often led to false negatives, where the doctor thought they biopsied the tumor, but actually just grabbed healthy lung tissue next to it. Or it required the patient to undergo a highly invasive, open surgical lung biopsy just to get a diagnosis.
But the Ion robot changes the paradigm. It uses shape-sensing fiber optics. A laser light is sent down a fiber optic cable running the length of the catheter.
Okay.
As the catheter bends through the airways, the system measures the microscopic changes in how the light bounces back, calculating the exact shape and position of the catheter in three-dimensional space hundreds of times a second.
That is incredible.
It navigates those tiny winding airways with sub-millimeter precision, locks itself into a rigid shape to counteract the movement of the breathing lung, and allows the physician to deploy a needle perfectly into the nodule.
Wow. Catching lung cancer at stage 1 versus stage 4 drastically alters the 5-year survival rate.
It really does.
The 36% growth rate in Ion procedures is a direct reflection of hospitals recognizing that this technology saves lives and draws high-margin diagnostic volume to their pulmonology departments.
The clinical superiority of these systems is the ultimate driver.
Yeah.
There was one more study they cited on the call that really hammers home why robotics are winning out over traditional manual laparoscopy, regardless of the macroeconomic climate.
Oh yeah, I saw that.
It was a study published in the journal Surgical Endoscopy comparing robotic-assisted appendectomies to traditional manual laparoscopic appendectomies across a multi-hospital health system, looking at over 1,400 patients.
Right.
The primary metric in that study was the rate of conversion to open surgery. In the manual laparoscopic approach, where the surgeon holds rigid sticks and looks at a 2D monitor, the conversion rate was 3.2%.
Right.
In the robotic-assisted approach, the conversion rate was literally 0%.
Zero. Wow. Conversion to open surgery is essentially the worst-case scenario for a minimally invasive procedure, right?
Oh, absolutely.
The surgeon starts with small keyhole incisions, encounters a massive complication like uncontrollable bleeding or a ruptured necrotic appendix, realizes they cannot handle it with rigid laparoscopic sticks, and has to rapidly slice the patient's abdomen wide open to save them.
Yeah, it means the patient wakes up with a massive scar, a huge risk of infection, and weeks of painful recovery instead of days.
Right.
It is a massive clinical failure for the surgical plan. Furthermore, after adjusting for variables, the authors found the robotic approach was associated with a 66% decreased risk of any complication relative to the laparoscopic approach.
That is a massive difference.
When a surgeon encounters a crisis, the 3D visualization and the 7 degrees of freedom provided by the robotic wrists allow them to maneuver, stitch, and control the bleeding with a level of precision that is mechanically impossible with straight, rigid laparoscopic tools.
Which brings us to the forward-looking expectations. Management sees this entire board. They see the GLP-1 bariatric headwinds, the temporary ACA deferrals, but they also see the explosive 61% growth in single port, the dominance of Ion and lung biopsies, and the undeniable clinical superiority driving the DV5 upgrade cycle.
Exactly.
Because they are synthesizing all these mixed signals, their financial guidance for the rest of 2026 is incredibly revealing. Let's look at the guidance data.
Okay.
First, they maintained their full year 2026 procedure growth estimate at 13.5% to 15.5%. But the metric that really jumped out was that they actually raised their non-GAAP gross profit margin estimate to a range of 68% to 69% of revenue.
If we connect this to the bigger picture, raising gross margin guidance in a quarter where you explicitly acknowledge macroeconomic pressures and consumer deferrals is a massive display of underlying operational strength.
Definitely.
It tells investors that their manufacturing efficiencies, their supply chain cost reductions, and the stronger pricing power of the new DV5 system are more than offsetting inflation and lower procedure volumes in certain categories.
Yeah, in Q2, their reported non-GAAP gross margin actually hit an eye-watering 70%. Right. Now, CFO Jamie Samuth was transparent and clarified that this included a $36 million pre-tax benefit from a refund of previously paid IEPA tariffs.
Right.
If you strip that one-time tariff refund out of the equation, the true operational gross margin was 68.7%.
Which perfectly validates their new raised guidance range. Yep. But the critical piece for a growth investor is what they are doing with that massive influx of cash. The CFO explicitly stated that Intuitive is intentionally growing their R&D research and development at a higher rate than their SG&A, their sales, general, and administrative expenses.
This is the dividing line between visionary tech companies and legacy dinosaurs.
It really is.
When the macroeconomic environment tightens, weak companies slash their R&D budgets to artificially prop up their quarterly earnings per share and keep Wall Street happy today. They sacrifice their pipeline to survive the present.
Yeah, and Intuitive is doing the exact opposite.
Right. They're keeping a tight leash on their administrative headcount while actively pouring capital into their innovation pipeline.
And on this call, Dave Rosa gave us a glimpse of what that R&D money is funding.
Oh yeah, this was huge.
He announced they recently submitted a $510K clearance application to the FDA for a foundational, non-commercial, next-generation flexible robotic endoscope system designed specifically for the gastrointestinal or GI tract.
This represents a monumental expansion of their addressable market.
Oh, massive.
The GI tract presents a fundamentally different anatomical environment than the abdominal cavity or the rigid airways of the lungs. It involves navigating the soft, collapsing, highly tortuous paths of the esophagus, the stomach, and the deep intestines.
Right. Today, many GI procedures are purely diagnostic, like a standard colonoscopy, or they involve very rudimentary therapeutic interventions using traditional flexible endoscopes that have incredibly limited maneuverability.
Yeah, Rosa said they are synthesizing the learnings from the rigid articulation of the Da Vinci and the flexible shape-sensing navigation of the Ion to build this new GI platform.
Imagine taking the extreme precision, 3D vision, and wristed stability of the Da Vinci, miniaturizing it, and putting it on the end of a flexible, navigating snake-like catheter that can travel through the intestines.
Wow.
It could completely revolutionize the treatment of complex GI cancers, removing precancerous polyps or addressing ulcers without requiring external abdominal incisions at all.
So the entire surgery happens luminally, from the inside out.
Exactly. The fact that they are already submitting for FDA clearance means this technology is far past the conceptual phase.
Right.
They are methodically engineering a platform for every single organ system in the human body.
I understand the R&D strategy, but I have a major pushback on another strategic initiative they announced for rollout in the first half of 2027.
Okay.
This is the part of the transcript that genuinely confused me, and I need you to explain the underlying logic.
Sure. What is it?
They are introducing something called the Extended Use Program. Under this initiative, Intuitive is purposefully going to increase the number of times a hospital can use a subset of their EndoWrist instruments before the microchip locks them out and they have to throw them away.
Right.
By extending the useful life of the instrument, Intuitive is explicitly targeting a lower customer cost per use.
Yeah.
Wait, why would a company willingly lower their own revenue per use? You just walked me through how their 85% recurring revenue model, forcing hospitals to buy new blades constantly, is the holy grail of their SaaS-like margins.
On the surface, it seems counterintuitive to cannibalize your own revenue per unit.
Yeah, it seems like they are actively sabotaging their own pricing power.
But if you look at the competitive landscape, it is actually a ruthless, brilliant, long-term strategic move. Management referred to this on the call as a virtuous cycle.
Okay.
To understand it, you have to segment the surgical market by complexity and hospital profit margins.
Walk me through the economics of this. How does making less money on an instrument lead to a stronger business?
Let's look at highly complex, life-altering procedures like a radical prostatectomy or a complex cardiac valve repair.
Right.
In those surgeries, the clinical risk is massive. The hospital and the surgeon demand the absolute best technology available, and they are more than willing to pay top dollar for the Da Vinci instruments because the robotic precision is non-negotiable.
Makes sense.
But Intuitive doesn't just want the complex cases. They want to completely monopolize all surgery, including the millions of high-volume, lower-complexity benign procedures performed every year, like basic hernia repairs or gallbladder removals.
Okay, let's take a standard gallbladder removal. If a hospital uses traditional manual laparoscopy with cheap, dumb steel sticks, their instrument cost might be a few $100s.
Right.
If they use the Da Vinci robot, they have to pay for Intuitive's highly engineered wristed instruments, which could cost a few $1,000s per surgery.
Exactly. And the reimbursement the hospital receives from Medicare or private insurance for a basic gallbladder removal is relatively low. The hospital's profit margin on that procedure is razor thin.
Ah, I see.
If the cost of the robotic instruments eats up all the profit, making the surgery unprofitable for the hospital compared to traditional laparoscopy, the hospital administrator will step in and mandate that surgeons cannot use the robot for gallbladders.
Ah. By launching the extended use program and extending the life of the instruments, Intuitive significantly lowers the per procedure cost specifically for these high-volume benign surgeries.
Right.
Suddenly, the math works for the hospital administrator. So Intuitive drops the instrument price per surgery by 20 or 30%. The hospital goes from authorizing 10 robotic gallbladders a month to authorizing 100 robotic gallbladders a month because now they can offer the robotic marketing appeal to patients while still maintaining a profit margin.
Precisely. The sheer volume of procedures skyrockets. And because the volume increase is so massive, it completely overwhelms the lower revenue they get per instrument.
Wow.
They end up making far more money in aggregate. But there is a secondary, arguably much more important strategic reason behind this move.
Slamming the door on competitors.
Exactly. If Intuitive keeps their instrument prices sky high across the board, they leave a massive price umbrella. They essentially invite a cheaper, inferior robotic competitor to come in and steal the lower end market share.
Yeah, we are seeing massive legacy healthcare companies trying to break into this space. Medtronic is rolling out their Hugo robotic system. Johnson & Johnson is developing their Ottava system.
Right. If Intuitive remains too expensive for benign procedures, a hospital might say, we love Da Vinci for our complex cancer cases, but it's too expensive for hernias. Let's buy the cheaper Medtronic Hugo system just to handle the high-volume hernia cases.
Oh, and once that competitor's robot is physically inside the hospital, they have a foothold. Surgeons start training on it, the IT department integrates it, and suddenly, Intuitive has a real war on its hands.
By lowering the cost of entry via the extended use program in 2027, Intuitive starves Medtronic and J&J of any entry point.
They make it economically irrational for a hospital to buy a second-tier robot.
Yeah. Intuitive captures the entire continuum of care, from the most complex reconstructive neurosurgery down to the most basic outpatient hernia repair.
It is incredibly aggressive, long-term strategic thinking.
It really is. They are willingly taking a minor short-term hit to unit pricing to permanently expand their total addressable market and reinforce their moat with concrete.
And understanding that strategy directly informs how retail investors should view the stock today, leading us to the bottom line of this analysis. So what does this all mean?
Well, based on the detailed breakdown of this Q2 2026 data, the verdict is that this was an exceptionally strong, overwhelmingly bullish quarter for Intuitive Surgical.
Oh, absolutely. Despite the very real macroeconomic tightening, the expiration of ACA subsidies causing deferred care, the rise of GLP-1s eating into bariatric volumes.
Yeah.
Hospitals are still aggressively finding the capital to fund the DV5 hardware upgrade cycle.
The underlying operational metrics are incredibly robust, and their market segmentation strategy is flawless. We see this not just at the high end with the DV5, but also at the low end with ambulatory surgery centers, or ASCs.
That's a crucial part of the bull thesis. ASCs are outpatient surgical centers, not massive hospital campuses. They are highly cost-constrained, independent facilities.
Right.
In Q2, Intuitive placed 27 systems in ASCs in the U.S. But notably, 20 of those 27 placements were for refurbished Da Vinci Xi models, which they call the XIR.
This ties perfectly into the extended use strategy. An outpatient surgery center doing basic same-day procedures does not need the 10,000x computing power and force feedback of a brand new DV5.
No, they definitely don't.
By offering high-quality, refurbished XIR models at a lower capital cost, Intuitive is opening up an entirely new customer segment that previously couldn't afford to enter the robotic space.
So they get these ASCs hooked into the Intuitive recurring revenue ecosystem with older hardware, further expanding their market dominance.
Exactly. And looking internationally, outside the U.S., total procedures grew by 20%.
Yeah, the context here is vital because they are generating that international growth while essentially fighting with one arm tied behind their back in China.
Very true.
The CEO noted significantly lower tender activity in China, increased domestic robotic competition, and intense policy-driven pricing pressure via the Chinese government's value-based purchasing, or VBP, pilot programs. In fact, Intuitive only placed 2 systems in China this entire quarter.
The VBP program in China is a massive headwind for all Western medical device manufacturers. The government essentially forces companies into a brutal bidding war, driving prices down to the absolute floor in exchange for guaranteed volume.
Right.
It destroys profit margins and inherently favors localized domestic manufacturers over premium imported platforms like Da Vinci.
But the bull case shines through when you realize that even with China basically paralyzed, their global placements outside the U.S. still increased 12% because other major markets are accelerating rapidly to fill the void, specifically Japan.
Yeah, Japan is acting as a fantastic counterbalance. New governmental policies supporting robotic surgery reimbursement went into effect on June 1st in Japan, covering a wider array of procedures.
Nice.
The market responded instantly. Intuitive placed 25 systems in Japan in Q2, up from 15 in the prior year. When one global market tightens due to protectionist policies, the geographic diversification allows another market to pick up the slack.
So for you, the retail investor, the actionable advice is clear. Intuitive's ecosystem lock-in is stronger than it has ever been.
Definitely.
The headwinds from GLP-1s and ACA deferrals are real, but they are vastly overshadowed by Intuitive's aggressive expansion into new verticals.
Right.
Like thoracic and lung with the Ion and the forthcoming GI platform.
Right.
They're pushing down market into ASCs with refurbished hardware. They are dominating the premium tier with the DB5 upgrade cycle, and they are ruthlessly defending their moat by lowering instrument cost to block competitors.
Yep.
If you own ISRG, you hold it tightly. If you are looking to build a position, any macro-driven dip in the stock price is likely a buying opportunity because the fundamental mechanics of their business model are borderline impenetrable right now.
And this raises an important question, something we should leave our listeners pondering as they look toward the future of healthcare.
Lay it on us.
We spent this entire deep dive talking about the physical mechanisms of the robot. You know, the wristed titanium instruments, the hardware placements, the force feedback strain gauges.
Right.
But the most provocative thought hidden in this earnings call isn't about physical hardware at all. Management casually mentioned that they just rolled out the first phase of more than 100 planned software updates specifically for the Da Vinci 5 platform.
Over 100 purely software-driven updates for a physical surgical tool.
Exactly. They are currently submitting applications to the FDA for software features like digital rulers, which will allow the surgeon to use augmented reality on the screen to precisely measure the dimensions of an organ or a tumor in real time while operating.
Wow.
They are executing renewals for My Intuitive Plus, an app that provides surgeons with AI-driven case insights, telepresence capabilities, and surgical simulation based on their own operating history.
That is amazing.
And the transcript noted that not a single customer opted out of their My Intuitive Plus arrangement.
Wait, zero churn on the digital software side.
Zero. So the question we have to ask ourselves as we look to 2027, 2030, and beyond is this: are we rapidly approaching a technological tipping point? We need to ask whether the Da Vinci is no longer just a fancy mechanical marionette for a human surgeon, but is evolving into an active, intelligent, data-driven partner in the operating room.
Right.
Intuitive now has video and telemetry data on over 14 million historical surgeries. They are feeding that data into AI models. When a robot has 10,000 times more computing power, real-time tissue force feedback, and an AI brain analyzing every millimeter of movement against a database of millions of successful surgeries, how long until the robot isn't just passively following the surgeon's hands?
Wow.
How long until the system recognizes the visual pattern of a critical bile duct, anticipates the surgeon's movement, and actively locks the surgical scissors to prevent a catastrophic human error?
We are talking about the glide path to semi-autonomous surgery. It's like a modern car that automatically hits the brakes when a pedestrian steps into the street, regardless of what the driver is doing with the pedal. We started this deep dive talking about how surgery used to just be about a human's physical hands and a sharp piece of steel. Now it's about localized AI models, augmented reality overlays, and a 10,000-fold increase in processing power, acting as a safeguard against human fallibility.
It is a completely different world, and Intuitive Surgical isn't just participating in it, they are writing the foundational code for it.
Thank you for joining us on this incredibly deep dive into the data behind the headlines. We encourage you to take these insights, look at the broader healthcare ecosystem, and apply this knowledge to your own portfolio research. Until next time, keep digging.